Folks, you are not going to believe how calm the tape stayed last week while the world tried to hand us one geopolitical headline after another. The market absorbed everything. It refused to price in fresh fear. And that, my friends, sets up one of the cleaner, week ahead environments we have seen in months. This is the Sunday forecast. I am Russell Clark, and today I am walking you through exactly what I am watching Monday morning and how VixShield traders should prepare for the 5 sessions ahead. This episode is brought to you by Iron Condor Command, the definitive guide that has helped thousands of traders master defined risk strategies with confidence. Let me start with the setup we take into this new week. Last week, the S&P 500 stayed essentially flat near 7138. The VIX opened around 18.92 and closed the week near 17.95. That gentle decline in the volatility index, while crude oil ran from $96.37 all the way to $106.88 before fading, tells you everything. The tape looked at Middle East supply risks. It looked at Iran nuclear headlines. It looked at fresh tariff talk and an OPEC member walking away. And the tape simply yawned, realized volatility stayed inside very tight daily ranges. Contango remained healthy, and short premium strategies collected their credit day after day. You and I know what really happened here. The pundits on television kept screaming panic. They kept warning that this time the headlines would finally matter. The tape disagreed. Smart money had already priced the obvious risks weeks earlier. Institutions quietly rotated into tech while buying out of the money puts for cheap insurance. Gold weakened even as tensions rose. The dollar climbed midweek, then retreated modestly. 10-year yields held steady near 4.34% to 4.42%, and the VIX refused to break out of that 17 to 19 zone. That is not random. That is the market telling us the fear trade is already in the price. When the volatility index refuses to spike on expected catalysts, the math hands premium to disciplined sellers. And that is exactly what VixShield members experienced. 5 straight place signals, no holds, every trade independent, every trade cash settled, every trade expiring the next market day with zero overnight stock risk. Now listen, this is not luck. This is the power of following the tape instead of the narrative. The headlines said trade war escalation. The bond market said priced in 3 weeks ago. The headlines said energy shock. The VIX said energy risk is greater than equity risk right now. And that disconnect is precisely why defined risk iron condors performed so well. We placed 5 trades last week. All 5 followed the RSAI engine, firing between 3:10 and 3:14 Central Time. Conservative tier collected roughly 70 cents per contract. Balanced around $1.15. Aggressive $1.60. All with the same rule set. Enter. Collect credit. Let it expire tomorrow. No rolling from one day to the next, because there is nothing to roll. Each day is a clean slate. And honestly, that is one of the more interesting weeks we have had in a while. The market climbed a wall of worry. Gold hit records earlier in the cycle, but actually gave back ground last week despite the noise. Crude firmed heading into the weekend, yet the equity market refused to roll over. The dollar showed notable strength midweek before settling back. Bitcoin and Ethereum stayed in tight ranges, all of it pointing to institutions hedging policy risk without abandoning risk assets. That is the setup we carry into Monday. A market that has demonstrated remarkable composure, a volatility index that is trending lower while staying above its longer-term moving average, and a term structure that continues to pay you to sell near-term volatility. Here is where it gets interesting. This week, the calendar is relatively light, but the implications are heavy. We start Monday with very little on the tape. That gives us breathing room after last week's absorption phase. Tuesday brings ISM services data. Traders will be watching whether that print comes in soft or firm. A soft reading could create a modest volatility pop. We stay ALVH ready for that. A strong print would reinforce the soft landing narrative that has kept equities resilient. Wednesday, the focus shifts to trade and policy. We have fresh updates on tariffs. Remember the 25% Iran-related tariffs we discussed on Saturday. The market has largely digested them, but any new details or retaliation talk could move cross-asset flows. The bond market will be paying close attention. Yields have been stable, but any shift in inflation expectations coming out of energy prices will show up there first. Thursday, we get a look at jobless claims and pending home sales. These are not headline events, but they feed directly into the Fed's decision-making process. You and I know the Fed held rates last week with vocal dissent. That dissent is still in the air. Any hint that the labor market is softening faster than expected will be watched closely. The tape has been telling us policy uncertainty is already priced. We will see if Thursday's data confirms that view. Friday brings the monthly employment report. Non-farm payrolls. The first Friday of the month as usual. This one carries extra weight because it lands right before next week's heavier calendar. A big beat or miss could swing sentiment heading into the weekend. But here's the conservative truth-seeking lens we always apply. Most analysts will call any surprise a panic. Panics do not look like last week's price action. Last week's action looked like digestion. So we approach Friday's number with healthy skepticism of the mainstream narrative. We trust the tape over the pundits. Now pull back and look at the broader geopolitical picture because it matters for your iron condor positioning. First, the Middle East. Iran nuclear proposal and supply risks drove crude from $96.37 to $106.88 before it faded back to $101.94 by Friday. The VIX yawned at that entire move. That tells you equity volatility and energy volatility are dancing to different tunes right now. Second, the surprise UAE exit from OPEC. That fractures cartel discipline and could keep crude volatile. Yet again, the S&P 500 refused to care. Third, tariff escalation. Trump's 25% Iran-related tariffs added another layer of policy uncertainty. The headlines sold fear. The dollar climbed, then retreated. Gold weakened. That combination suggests institutional hedging via the dollar, while still favoring growth assets. Fourth, China tensions remain in the background. Any flare-up over Taiwan or BRICS developments would normally spike volatility. So far, the market has treated those risks as long-term rather than immediate. Fifth, the Fed's rate hold with dissent. Central bank language versus what the tape actually did. The Fed talks hawkish. The VIX trends lower. That gap is where opportunity lives for defined risk sellers. Each of these threads connects directly to how your iron condor behaves. When geopolitical noise fails to ignite sustained volatility, the term structure pays you to sell the front end. When the dollar and gold move in ways that suggest hedging without panic, your short premium position benefits from compressed realized moves. This is not theory. This is what the tape showed us last week, and it is the environment we are likely to carry into the 5 days ahead. Let us talk about the VIX term structure because it remains the backbone of our edge. Right now we sit in a healthy contango environment. Longer dated volatility is priced higher than near-term volatility. That is the calm, normal state of markets, and it favors short premium strategies like ours. The VIX closed the week near 17.95. It stayed below its 5-day moving average of 18.58 for much of the week. That tells us realized volatility is behaving. When the term structure stays in contango and the spot VIX refuses to break higher, The RSAI engine tends to fire place signals in the 310 to 314 window. That is exactly what happened 5 days straight last week. Now ask yourself, when was the last time you saw a setup this clean? The market tested the highs, it tested the lows, it failed to break out or break down in any meaningful way. That is range-bound perfection for iron condors. And the beauty of our system is that every trade is independent. Monday's trade expires Tuesday. Tuesday's trade expires Wednesday. There is no carryover, no emotional baggage from the day before. You collect credit. You let math do the work. You wake up the next day with a clean slate. If the VIX stays in this 17 to 19 zone, the conservative balanced and aggressive tiers all remain available. Conservative targets roughly 70 cents of credit with around 90% historical win probability inside the expected daily range. Balanced steps up to $1.15. Aggressive $1.60. All with the same discipline. Maximum 10% of account risk per trade. Cash settled SPX, so no assignment. No overnight stock positions. That structure is your protection against the very geopolitical chaos we just reviewed. Zoom out with me for a moment. This is not just about next week. This is about how policy, geopolitics, inflation, and volatility factually affect capital preservation and income generation. We apply a disciplined, conservative-leaning lens, grounded in data, historical precedent, and macro reality. Never predictions. Always risk management and patience. Look at the cross-asset behavior last week. Crude oil ran hard on supply fears, then gave back gains. Gold sold off despite the tension. The dollar climbed to 98.92 midweek, before settling at 98.21. 10-year yields peaked at 4.42%. Bitcoin traded around 75,000 to 78,000. Ethereum stayed near 2,250 to 2,300. All of these assets told a story of hedging without capitulation. That is the bigger picture. Markets are digesting uncertainty rather than panicking over it. For VixShield members, that environment translates into repeatable premium collection. The RSAI engine optimizes strikes in 253 milliseconds, using skew data most retail traders never see. The EDR expected daily range blends VIX 9-day, implied with 20-day historical volatility, and a regime multiplier. When that range holds, we win full credit. When it threatens, we have rules, never emotion. And that brings us to our protective layers. ALVH, the adaptive layered VIX hedge, 4-4-2 ratio, short, medium, and longer dated VIX calls per 10 iron condor contracts. It costs 1 to 2% of account value annually, yet cuts drawdowns 35 to 40% during volatility spikes. We keep it active, always, because geopolitics can shift fast. One headline from the Middle East or a surprise central bank comment can move markets. ALVH is there so you do not have to be. We also have the temporal theta martingale and theta time shift mechanism. If the expected daily range expands above 0.94% or the VIX pushes above 16, we can roll the position forward in time to capture Vega expansion. Then roll it back when conditions normalize and the S&P pulls back under VBWAP. That process has historically recovered 88% of threatened losses without adding capital and without using stop losses. It turns potential losers into theta positive recoveries. That is not hope. That is engineered discipline. Now let us talk about Friday's RSA strikes and what we need to see this week for those positions to win. Because Friday's trade is already live, it expires at the close of Monday's session. We place the conservative tier at strikes that give us a wide range around the expected daily move. Balanced and aggressive tiers sit at their respective widths. For all three to win, the S&P 500 simply needs to close Monday between those wings. No prediction, just math. If it does, we keep full credit. If one leg is breached, we take the defined loss and move to Tuesday's fresh trade with a clean slate. This is the beauty of the system. One day at a time, one signal at a time. The RSI engine will fire again between 3:10 and 3:14 Central Time on Monday for Tuesday's expiration. We will follow the same process. Look at the EDR, check the VIX trend rules, apply the appropriate tier, enter, collect, let it expire. Last week we went 5 for 5 on place signals. That is not a guarantee for next week, but it does show what happens when the regime favors contango and contained realized volatility. We approach this week with the same mechanical mindset. If the VIX stays well behaved, we expect continued place signals. If it pushes higher, the EDR filter may tighten and we may see a hold or a more conservative wing placement. Either way, the rules are clear. The discipline is non-negotiable. So here's our game plan for the week ahead. Monday's light calendar gives us a clean start. We watch the open for any gap from weekend news. Then we let the tape settle into the 3:10 window. Tuesday's ISM services number is the first real catalyst. We stay ALVH ready in case that print surprises. Wednesday through Friday, we layer in the tariff updates, jobless claims, pending home sales, and finally the employment report. Each event is an opportunity to watch how the market prices policy and geopolitical risk in real time. For new listeners, let me say this plainly. VixShield is not about predicting direction. It is about harvesting theta inside defined risk structures that do not care which way the headline breaks, only whether the S&P stays inside the expected range. We size at maximum 10% of account per trade. We never hold overnight equity risk. We never chase losses with discretionary stops. We let the math work. And when the math needs help, we deploy ALVH and the temporal theta tools that have been back-tested across multiple regimes. Watch the dollar. Watch crude oil. Watch whether gold continues to weaken or find support. These cross-asset signals often tell us more about volatility expectations than equity price action alone. If the dollar firms while crude stays elevated, that tends to keep equity volatility compressed. That is good for our short premium positioning. If any of those relationships break, we will see it in the VIX term structure first. That is why we watch the contango indicator every day. And be sure to listen for any breaking news from Miss Vicky. If you found this summary valuable, consider upgrading to Pro or higher for the full twice daily VixShield market summaries, proprietary signals, and private RSS feed. Visit VixShield.com to learn more. These signals and insights are for educational purposes only and are not financial advice. Trading involves substantial risk of loss. You can lose more than your initial investment. No live trade execution. Signals only. Past performance is not indicative of future results. This is VixShield, your protection against market uncertainty.